Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to take a look at two big cybersecurity companies that may be a great buy right now. The global cybersecurity market is projected to grow at a CAGR of 12.5% from 2021 through 2028. And the entire market is projected to grow to over $418 billion over the next 7 years. So a ton of future expected growth coming from the global industry. And in this video, we're going to take a look at two companies who have diverse operations in North America and all around the world that are poised to benefit from the future expansion of the long-term cybersecurity market. And as more and more companies transition more of their operations online, the demand for strong cybersecurity networks is only going to grow as well. So these two companies are already leaders in the industry, strong brand loyalty, strong brand awareness, growing revenue and earnings every single year, and definitely worth taking a look at for some more diversification in a nice growth portfolio. So in this video, we're going to go over the two different companies, take a look at their current operations, the company's financials, and the future expected growth rate coming from Wall Street analysts. But before we jump into that first company, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe for the daily videos. And the first company we're going to take a look at today is ticker PANW, which is Palo Alto Networks. They currently trade for $365 per share, and on the 1-year chart, they're up by 53%. And currently, Palo Alto has a market cap right around $35 billion, and over the longer term, they've continuously provided great returns to their investors, growing by just under 150% on the 5-year chart. And this cybersecurity firm operates in two main business categories. The first one is network security, or NetSec. This provides different firewalls, subscriptions, and support across multiple form factors, and the company has multiple different products developed for this business segment. And the second one, or what I believe to be the strong future of the company, is their cloud and AI security network. So this provides security in the cloud and automation and analytics through the use of artificial intelligence. And as a bull on AI, I believe any company that's successfully using it to grow their operations will provide great benefits to investors over the next decade and beyond. I think the development of artificial intelligence, machine learning, and Internet of Things is the future, and I think Palo Alto is already working very well in that system and will continue to grow and develop very fast going forward. And something I want to point out with Palo Alto, from their network security segment, they offer a subscription service. And if you're a subscriber to the channel, you know I'm a big fan of companies who generate subscription revenue because it provides a consistent cash flow into the business every month and every quarter that continues to grow over the longer term. And we can see that the company's next-gen security ARR, or annualized recurring revenue, continues to grow quarter over quarter to just under $1 billion at their latest report. So around $1 billion of revenue is recurring and flowing into the business every single year. And we can see the trend. It's almost doubled in a matter of a year. So going forward, I believe that will continue to grow very nicely as Palo Alto continues to expand. And their total revenue, so the total top line, quarter over quarter continues to grow to over $1 billion in the past 2 quarters. And we can see the growth rates average around 20% year over year. And one thing that's very important to know is that they're also collecting very wealthy clients. And the growth in active millionaire customers continues to expand as well, from only 460 back in 2018 to over 900 at the end of Q3 2021, and once again, averaging between 20 and 30% year over year growth every single quarter. So the company's attracting high-end clients as well, and not just the cheaper customers. And we can see that over the latest report, the company raised their guidance for the fiscal year 2021, and they're now projecting total billings to grow by 23% year over year, and the total revenue to grow by 23 to 24% and hit around $4.2 billion with an adjusted free cash flow margin of around 30%. So that's one thing to note, that in the cybersecurity network, the software-based companies, it comes with some great free cash flow and some nice margins, like we can see at 30% overall. And now if we take a quick look at the company's financials over the past 5 years, starting off with the income statement, we can see that total revenue has grown exponentially year over year from around $1.37 billion to just under $4 billion in the trailing 12 months. So they've almost 3x their total sales in a 5-year time period, and going forward, their company's forecasting 20% annual revenue growth over the medium term. But if we take a look at the bottom line, they're not profitable just yet. They're still posting net losses year over year, with kind of a bigger loss in the past 12 months of over $438 million. But this is a company where if you want to own them now, you're seeking profits in the future, and the current forecasts are showing that Palo Alto will achieve profitability by year end 2023 or 2024. So they're forecasting out 2 to 3 more years of losses before they can achieve profitability and sustain their own growth. So of course, this is typical of many young growth companies, but keep that in mind when doing some research into Palo Alto. And if we take a look at the balance sheet very briefly, their short-term ratio is in a decent position with total current assets of $4.1 billion compared to short-term debt of only $3 billion. So over the next 12 months, a current ratio above 1.3, and I think over the shorter term, they will be just fine and not have any big liquidity issues. And going forward, as the balance sheet continues to improve, this will become a very healthy company over the longer term. And now taking a look at the analyst projections going forward, they're forecasting 22% annual expansion for Palo Alto every year for the next 5 years. And the current share price of $365 is well below the 12-month expectation of $444 per share, implying at least 20+% upside to get to this level over the next 52 weeks. And right now, the stock is considered a strong buy, coming in at a 1.7. So overall, Palo Alto is liked by analysts. They're forecasting some big expansion going forward, and we have estimates that they'll achieve profitability over the next 2 to 3 years. So this was the first cybersecurity firm to take a look at for your portfolio. Definitely do some research into the company, speak with a qualified professional about the brand, and going forward, it may be a leader in the cybersecurity firm for decades to come. And now if we transition into the second stock we're going to take a look at in this episode, it's going to be ticker FTNT, which is Fortinet. They currently trade for $214 per share and are up by 49% in the past year. They have a market cap of $34.4 billion, meaning they're trading at a very similar size to Palo Alto at this current point in time. And if we jump into their investor presentation, they have some very strong highlights to go over the company's business. Currently, for the fiscal year of 2020, they had $3.1 billion in total billings, and their gross margin on the recurring service revenue is at around 80%. And right away, like we talked about with Palo Alto, huge fan of recurring service revenue with a massive gross margin of 80% overall. The company has over 500,000 customers and has generated free cash flow of $900 million, putting them in the top 10% of free cash flow margin in the S&P 500. And taking a look, their total revenue for the past few years has been growing at a CAGR of 20%. Back in 2017, they were at $1.5 billion of total sales, but that has now grown to around $2.6 billion in 2020. And 65% of their total revenue is coming from their services, which has grown at a CAGR of 22% overall. And like we saw, this service revenue is extremely profitable. And taking a look, the customer count continues to grow as well, to over 500,000 customers in year-end 2020. And every single year, they're expanding by tens of thousands, 50,000 new customers, 45,000, 55, and then in 2020, they added 60,000 new customers into the Fortinet network. That's absolutely phenomenal, and as that continues to grow, I think this company will be major player in the industry over the long term. And in the cybersecurity space, it's a very sticky industry, meaning once you're in a relationship with a company, once they're using their products and their services, it's not the easiest thing to just switch. It's not the idea of waking up in the morning, being unhappy with a company like Fortinet, and switching to a different brand later that day. Because of the nature of cybersecurity, the fact that it always has to be running, you have to stay secure at all times, it's very difficult to just switch customers and switch different products and providers at any point in time. And due to long-term contracts with some customers, it kind of creates consistent revenue and strong relationships with the brand of Fortinet, benefiting the company over the longer term. And we can see that their service revenue, which once again I'm going to focus on because it's highly profitable for the company, is growing at a CAGR of 22%. And as of 2020, it makes up 65% of their total top line. So when 65% of your total revenue operates with a gross margin of 88%, 88%, that is absolutely phenomenal. And I love to see this company become extremely profitable as they continue to grow and scale, and the gross margin maintaining at that level will be absolutely amazing for their shareholders. And we can see that because of such high margins, this company is able to generate a lot of cash every single year and a very high free cash flow margin of 35% in 2020, with over $908 million of total free cash flow flowing into the company. And once again, if you're a subscriber to the channel, you know I love companies who generate growing positive free cash flow every single year, because in any business all around the world, a simple metric is a company's ability to generate cash. And we can see they've more than doubled their total free cash flow in only 4 years, from around $460 million back in 2017 to over $908 million in total free cash flow in 2020. So a very strong sign, and love seeing these metrics coming from Fortinet. And what's also impressive is with this 35% free cash flow margin, that puts them in the top 10% of the S&P 500 in terms of free cash flow margin percentage. So we can see on the left-hand side here, their estimated 35% free cash flow margin puts them in the top 10% of all S&P 500 companies with a margin that high, which is absolutely phenomenal. And if we take a look at the company's financial statements, they are painting a great picture. Total revenue every single year continues to grow to around $2.7 billion in the trailing 12 months and exponentially expanding year over year. And if we take a look at the bottom line, this company is different to Palo Alto because they've been profitable every single year for the past 5 years. And I love companies who show profits. I love positive earnings. And we can see $491 million of net income over the past year as well. And taking a look at the balance sheet, short-term assets come in at $3.7 billion compared to short-term debt of only $1.87 billion. So right now a current ratio above 1.5 and sustainable over the shorter term. So the company is in a decent financial position right now, growing revenue, growing profits, and a nice ratio over the shorter term. And if we take a look at going forward, analysts are forecasting around 15 to 16% annual expansion in the share price over the next 5 years. And currently, the stock is trading right around their 52-week price target, but is still considered a buy, coming in at a 2.1. So Fortinet is definitely another cybersecurity name worth taking a look at for your portfolio. Nice growing revenue, nice profits, amazing free cash flow, one of the strongest free cash flow margins in the entire S&P 500, and definitely a brand operating in a fast-growing industry over the longer term. So now we're going to kind of wrap up the video. In this episode, we discussed Palo Alto and Fortinet, two big cybersecurity companies trading at very similar market caps, growing revenue, growing earnings, and growing free cash flow every single year, and they operate in a fast-growing industry. So definitely two brands to take a look at if you want some exposure to the cybersecurity networks in your portfolio. They offer nice long-term growth and great potential, and definitely worth doing some research into, speaking with your qualified professional, and maybe worth a spot in your growth portfolios. So thank you for watching to the end. Please hit that like button and subscribe. I'm the Gen Z Investor, and I will see you in tomorrow's video.